Good morning.
Good morning. Where are you at today?
I've been stuck with Gail all day, so it feels like Groundhog Day with that dog. That day that never ends, never ends.
It's almost 3 o'clock, so I don't know where you've been.
3 o'clock somewhere. It's time to start drinking, Gail. What do you say? Hi, Boom.
Hi. Happy Wednesday.
Happy Wednesday to you. What's going on? Anything fun?
A lot of moving and shaking.
A lot of moving and shaking. You know what I was thinking about today? I was thinking about, and this is kind of serious stuff, but
Do we really want to know what you're thinking? That's the question.
Probably not, but I was thinking that I wish that our country could get back the way we all felt on September 12th after 9/11.
Yeah. United.
United,
Yep.
together, just united.
Yep. That would be
The way everybody felt that day, even though that was the worst day in history, but the way everybody came together, I just wish we could do that again.
Yep. That would be.
I hope in my lifetime I see that.
Yep.
But I hope I never see another 911. But anyway, okay, so let's get back to fun. It's really fun. We have our great production crew, Gail.
Yeah.
And then behind Gail, we have a guest visitor. Miss Carmen Hoppo is here in the flesh.
In the flesh.
In the flesh. Hi, Carmen.
Hi.
Hi, Grandma. Who's your favorite grandma? Me, yeah. Okay.
She's got two.
She's got two, yes. So today, let's get serious about business.
Yes.
So I have two different listings. I want to talk to you about different financing options on.
Yep.
So I listed a darling log house. In fact, you did the financing on it for me last year.
Yep.
And
Very unfortunate.
unfortunate circumstances, it had to come back on the market. Very, very unfortunate. But it's adorable all log cottage home. I mean, it's really a year-round home on Little Bass Lake up in Montcalm County, 6 Lakes. And it would be a great year-round home for someone because it does have a garage and all that. Or it would be a great one for your second home program.
Yeah.
So how would that work? If I want to buy that as a second home, which your dad would never let me, but if I wanted to.
Yeah. So second homes normally come with these huge pricing adjustments on rate and on what are called interest rate points. Back in April of 22, from higher ups at the federal level, they pushed down these adjustments to make it harder for second home buyers and investment home buyers to buy homes.
That's so stupid.
Essentially to drown out the competition for first-time home buyers. It has had its impact, but we all know, we talk about it every week, we don't have enough inventory.
Right.
So there are fewer buyers out there because of these cost prohibitive measures that they've put out there.
So there's less buyers for the type of property.
Yeah, I mean, they have essentially put a tax on buying a second home or investment.
So it's more expensive for me to buy
Hell of
that
a lot
second
more
home.
expensive.
Okay.
I mean, we're talking 2.5, 3 points.
Oh, wow, that's a
It
lot.
makes it almost impossible to do from a financing standpoint because we have certain limits on percentages of costs.
Okay.
in
But you
most
have a
points.
solution.
We have a solution
Yes.
for that with respect to things, but we also have a solution to the second home.
What's
where,
that?
Well, it's just how we
Okay.
flexible.
You're flexible.
We're fluid like water.
Okay.
No, we have a solution for second home products where we don't have those pricing adjustments. So our buyers, assuming they meet the criteria, which they're very, very reasonable, they don't have the pricing adjustments, so they're not paying points. The rate is the same as what you would if you're buying a primary home, which is seen as less risk.
The rate's the same as if it was my own personal property.
Yep.
Wow.
Through this program.
Okay.
So
That's a no-brainer.
It's a no-brainer. I just did a presentation on it earlier today on a $700,000 home. The pricing was about 75 basis points, so 0.75% better than Fannie Freddie pricing.
Okay.
Or rate.
Yep.
And it was like almost 3 points of interest rate points that the customer would not have to pay
With you.
with us.
Yep.
So on a $700,000
Oh, that's a
purchase
big chunk.
with 10 down, it was like $17,000
Yeah, that's a lot of money.
they did not have to bring to closing just to do the loan. Whereas if you stayed Fannie Freddie, you would have to pay a
more.
higher rate and points.
Yeah.
So
That's a great program.
So when we can use that, we absolutely use it. We use it for snowbirds down in Florida. We can now do it in Chicago for high rises and Traverse City for high rises. We started off towing the water, not doing anything but site condos.
Mm-hmm.
Now we can do.
So if I wanted to buy a house in Florida as my second home,
Yep.
you could do that for
absolutely.
me on that program.
On that program.
Okay.
Yep.
All you snowbirds want to buy down there, you call me because I can sell down there. You can loan down there.
Yep. No, it works. It works great. It's a game changer.
That's awesome.
Yep.
Okay, so that's one of my great listings this week. I just listed this morning. So on this one, I want to talk about how to be competitive on this one. So I listed an amazing 20-acre parcel. It has a big pond on it. It's wooded. Jamie Stuffins, Hunterman of the Year, has told me there's some big bucks come off that one. He saw there's like they did some rutting or some.
Did he say it with that gruff?
He did. There's some big bucks come off that. Yeah. Something he was saying something about the lanes. I don't know what the hell they're talking about. Something about the lanes with the deer, and he knows. Jamie does. Anyway, so 20 acres. The house needs a lot of work.
Okay.
It needs a lot of work, and but it's an 1,800 square foot ranch, and the potential in that house. I mean, when you're done, you've got a show place.
Yep.
So I think it's going to be very competitive. I priced that one. You guys, you're not going to believe this. $230,000 for that house and 20 acres. We did take into effect that the house needs a lot of work, but it's. I think it's going to be very, very attractive to a lot of people. So if I wanted to buy that house and be competitive in the bids I think I'll get, how would I do that without selling my house? So let's say I have $100,000 of equity in my current home. I want this house, and then I'll put my house on the market once I get that tied up.
Yeah. So a non-contingent offer is critically important in this market, as you know, to be as competitive as you can be. You want, if you're going to get financing, you want it to be conventional, which that
this
house
one's got to be conventional.
To me screams conventional financing.
Yeah, we didn't even offer FHA or VA because I know we can't do it.
They'll pick it apart. Conventional financing with probably some type of construction component built in within that.
How much would we need down on that?
It just depends.
Okay.
So there's matrix. It just depends.
Okay.
The more you bring in, the more liquidity you have, the better.
Right. Okay.
There's going to be some reserves needed because we all know what you put on paper as a construction plan, it's not going to come out to the penny.
Right.
So you need to have the ability to show some strong reserves and liquidity and all that. But a non-contingent offer, let's forget the construction.
Yeah.
Conventional offer is going to be very competitive. A non-contingent where you're not having to sell your house first to do that. And what we would do with that is we would look at a bridge loan, tapping into the person's equity that they have in their existing house, deploying that, whether it's to optimize their debts, to put money in for a down payment, to fund improvements on the new house. Heck, we've seen people use our bridge loan once they move into the new house to fix up the old house, so you have a better product to sell.
I like that idea.
So if it's not paint or anything like, hey, you really need to spend $5,000 on this or that, or do some flooring because we know that it's gonna get brought up.
Right.
You can do that. There's really no limit to what we can use our bridge for. Other lenders typically don't do bridge loans. The very few that do have very limited usage
of the funds.
Yep. It's normally for down payment purposes. We have no limitations.
Yeah, I love your bridge loan. I love your bridge.
It's a game changer. You're sitting on a piggy bank of equity that you've built over time, right, in your home, and we're just essentially deploying that money ahead of time. There's no tax consequences. I mean, you could deplete some of your retirement or your marketable securities. That has potential tax consequences. Whereas if you lived in your home and you meet the exemptions, you're not going to have tax implications. So CPAs love it. Financial planners love it. You love it.
I love it.
So.
All right, I'm going to talk about one more house.
Yeah.
we'll do it quick because Blondie, the production crew, has to go.
Yes.
I'm going to be listing a property for you.
Yep.
A darling 2-bedroom, 1-bath home, ready to move into, so cute.
Yep.
In Ionia, going to list that at $145,000.
Okay.
Does that sound good to you?
Possibly.
Oh, I might have to negotiate that price. Well, that's my price. We'll see what it goes on the market at. I'm saying $145,000. Are you thinking lower than that?
I don't know.
Well, she just blew it for higher.
Yeah, she just blew it for higher. When I want to be a smart ass, when people are saying, well, it's, what kind of rate can I get? I've jokingly said, well, how high do you want it?
Well, yeah. So my price is going to be $145,000.
Gotcha.
And I think that house is going to qualify for your community banking.
Yeah, our My Home Rewards, I know the address. We'll pay for title, we'll pay for appraisal, we'll pay for processing, underwriting, some credit stuff. There's no cap on it. I know other banks have, say, a $2,500 cap. There's no cap on this. So
okay.
It's
good.
Certain things that get paid for, but I know for a fact that if the borrowers collectively have less than basically $134,000 of income
together,
mm-hmm. or individually, I just kind of shifted some borrowers where their collective income was going to be more than that. We took her off and just went with his and got him qualified, saved him $3,100.
Good.
So we'll look at those two scenarios and see if we can get it approved.
Great.
With just the one, if we are exceeding that 134 mark.
Good.
So if the income is under 134, I know the address qualifies.
Awesome. So I might have been jumping the gun on that. Maybe you're interviewing other agents and I'm not aware of it. Better not. Not on that one anyway.
It would be bad for
Thanksgiving won't be any fun, and Christmas will definitely not be fun. Okay. All good?
All good.
All good.
Yep.
3 great listings, 1 great lender, 1 great agent. Call me, Cathy.
One crazy mom.
Call me, Cathy, 616-915-2890.
And Boomer 616-902-0796.
Thanks.
Thanks.